Okay, good morning. Today I am going to discuss a simple topic, that is agricultural income. This chapter is very small chapter, and within half of an hour you will get all the details regarding agricultural income. Actually, as per Income Tax Act, agricultural income is exempt from the taxation. But how? We shall check how it is exempted and what are the rules regarding agricultural income. First of all, what an agricultural income as per the Income Tax Act? An agricultural income includes rent or revenue received from a agricultural land in India, or any income received from agricultural land through the agricultural operation, or income from farmhouse. These are the three basic things that are included in the agricultural income as per the Income Tax Act. Rent or revenue, or income derived from such lands through agricultural activities, and income from a farmhouse. These are the agricultural. Now we can make a detailed checking regarding these points. So first one is rent or revenue. Agricultural income includes rent or revenue. So what a rent is? Here the rent means a receipt of income by a person for giving a right to use his land to another person. That is a rent. Now what are the conditions of becoming an agricultural income? Rent will become agricultural income only if it satisfies these conditions, that rent or revenue derived from the agricultural land. It shall be derived from the agricultural land, and the land must be situated in India, and the land is used for agricultural purpose. The rent may be either cash or in kind, not problem. Now what a revenue? Here the revenue means anything other than rent is called revenue. Revenue received for renewal of the grant on a lease is an example for the revenue. Now, however, the revenue from a land does not include the consideration received on the sale of a land. If any person selling his agricultural land, but it may not be a revenue. But any other incomes other than rent is called revenue here. Keep in mind. Now we are getting into the second point, agricultural income composed of rent or any other income from such agricultural land through some of the operation, and income from farmhouse. We are getting into the second point, that is income derived from an agricultural land through agricultural operation, or through making the produce fit for the market, and through sale of such produce. If any person getting some income from the agricultural land through agricultural operation, or making the agricultural produce fit for the market, that's also treated as agricultural income. If he earns any income through this operation, then that's also treated as an agricultural income, and income received through the sale of agricultural produce. All these are agricultural income as per the Income Tax Act. Now what an agricultural operation? Though the Income Tax Act does not explain the agricultural operation, one of the case in Supreme Court has explained what are the operations included in an agricultural operation. We can categorize this operation into two. One is basic operation and the second one is subsequent operation. Basic operation includes all those processes which may a farmer or a person doing the agricultural farming does up to cultivating, or up to planting a plant, or up to seeding a plant. All those activities before you are seeding, or up to you are seeding a plant, up to that moment, what all the activities are included? All these activities are called basic operation, like tilling of the land, sowing of seeds, making ready the land fit for cultivating. All these activities are included in basic operation. Now the second one is subsequent operation. Subsequent operations are those operations which are started once you planted or seeded anything. Then after all, when the plant is started growing, in support of growing these plants, whatever the activities are you doing, all these activities or operations are called subsequent operation. So agricultural operation includes basic and subsequent operation. Carried out growth and preservation of the produce, like weeding. Weeding means removal of the unnecessary, unwanted wild plants or grasses from the soil or from the field, digging of soil around the crops, etc. And those operations which would make the produce fit for the market is also a subsequent operation, like pruning, cutting or harvesting. Now we are getting into a second point, that we are discussing any income that is derived from the land through agricultural operation. That was the first point. Then the second point is a process by the cultivator or receiver of the rent in kind to make the agricultural produce fit for the market. Any activities, agricultural operation, that may be basic operations or subsequent operation, and a process by which the cultivator transfer or make the product fit for the market. Suppose in some cases some of the products does not have, as it is, does not have a market in its raw form. So we have to convert it. Say, take the case of a paddy. We have to convert it into rice, then only it can be marketed. Or one of the example, ginning of cotton. Ginning of cotton means is the process of removing its seeds and separating cotton. Only after that process it can be marketed. If it is necessary for marketing such product, then it shall be treated as an agricultural income. Those income received from such processes making the produce fit for the market, then the farmer is receiving any income on that. That is treated as agricultural income. Otherwise, it shall not be treated as agricultural income. Say, for example, if any person is making manufacture of rubber or any other product, again he transfer to another form in order to get higher income. That shall not be treated as agricultural income. A separation will be there. Some portion will be agricultural income and the other portion will be business income in some cases. But if it is necessary for marketing, it shall be treated as agricultural income. That's all. Then the other point is sale of agricultural produce. Income received through sale of agricultural produce is also an agricultural income. Clear? So far we explained 2 points. One is income derived from the land as rent or revenue, then income derived from the land through agricultural operation, or agricultural operation may be basic operations and subsequent operation, or making the product fit for the market, then or through sale of agricultural produce. All these incomes are agricultural income. Now income, the third one, that is income derived from the farm building or farmhouse, we may say generally. So a farmhouse is an house which may be attached to the field or agricultural farm, which may be used by the farmers or the owners. Income from farmhouse, when it will become agricultural income. In some cases, all the incomes of the farmhouse may not be agricultural income. If these conditions are satisfied, we can say those incomes are agricultural income. So the condition is it shall be occupied by the cultivator or the landlord. So rectify that, cultivator or the landlord. It shall be occupied by the cultivator or landlord. It shall be situated in the immediate vicinity. Agricultural farm is in one place and the farmhouse is 5 kilometers away in city. No, it shall not be treated as the income from such house shall not be treated as agricultural income, but it shall be in the immediate vicinity. Then it shall be used to stay or as a storehouse. It shall be used for dwelling, for staying by the cultivator or by the owner of the house, or it shall be used as a storehouse or outhouse. It must be in rural area. Those farmhouses, income from farmhouses which is situated in rural area shall be treated as Agriculture Lingam. And a farmhouse which is situated in the land of urban area shall also be treated as Agriculture Lingam only when if it is assessed to local tax or the land revenue tax in India. So the farmhouse of the urban area is also treated as Agriculture Lingam only if it is assessed for local tax or revenue tax in India. Now, then one question does arise, what an urban area or what a rural area? So all those places in a municipality which is having more than a population of 10,000 will be treated as urban area. Those places in a municipality which is having a population of more than 10,000 will be treated as an urban area. So a population or a place in a municipality which is having less than 10,000 population will be treated as rural area. That's all. Now, if a municipality having a population of 10,000 to 1 lakh, an aerial distance within the local limit of municipality up to 2 kilometers will be treated as urban area. In a municipality there are 80,000 people, say for example. So the urban area is determined whether your farmhouse is in the aerial distance of 2 kilometers, then you are in urban area. If you are 3 kilometers away from a municipality, then you are in rural area. So what is the difference? What is the advantages of being in rural area? You have there is no need of paying local tax or revenue, land revenue to the central government. That's all in order to fix. So with the help of a picture or a diagram, we can understand this concept very easily. So if this is the municipality which is having more than 10,000 population, and this is its local limits, this is the places, and if your farmhouse stays in any aerial distance of this 2 kilometers, it will be in urban area. Now, if the population is 1 lakh to 10 lakh, then the aerial distance shall be within 6 kilometers. It will be like this, aerial distance of the 6 kilometers. So you have to keep in mind two things. One is the local limits of the municipality. From that local limit plus 6 kilometers, the place, if your outhouse or the farmhouse comes under the 6 kilometers within the local limits of the municipality, then it will be in urban area. Now, if your population, if the population of the municipality is more than 10 lakh, then an area within the 8 kilometers treated as urban area. Now, let's check some of the examples of the Agriculture Lingam. By this, you will get a complete idea regarding the Agriculture Lingam. Income from sale of seeds, replanted trees are Agriculture Lingam. Rent received for agricultural land is treated as Agriculture Lingam. Then income from growing flowers and creepers. Profits, interest on capital received by the partner from a firm engaged in agricultural activity. So, a profit of a partner or interest on capital received by a partner which is doing agricultural activity is treated as Agricultural Lingam. You have to keep in mind that. Then income from grazing of cattle in agricultural land. One condition is there that land shall be used for agriculture purpose, then only. If you are using, if you are doing some agricultural activities in that land, and if there is some grasses there, and you are giving all this for grazing cattle in free time or in off season, then it will be treated as Agricultural Lingam. Then sale of forest trees after replanting and subsequent activities. You have created a forest or you have replanted, you have looked after all these trees, you have done subsequent activities and you are selling it. You have done some of the basic and subsequent activities, right? Then you can sell this forest. Once this forest is spontaneously grown or self-grown forest or trees and you are selling it, it shall not be treated as agricultural lingam, but sale of a forest trees after replanting and subsequent activity, it shall be treated as an agricultural lingam. Then compensation by an insurance company on loss of the crop. So by checking this, you may get an idea all these are agricultural lingam, but give due care to these points, that is compensation given by an insurance company on loss of crop. Then the fourth point, that is profits or interest on capital received by a partner from a firm engaged in agricultural activities. All these 2 points you have to keep in mind. Now, here are some of the examples of non-agricultural income. Non-agricultural income, income from poultry farming, income from beehiving, income from sale of self-grown grass and trees, income from dairy farming, income from fisheries. See, by checking the features of all these, we may get an idea that if you are directly doing anything in the soil or in the land, then it shall be treated as agricultural income. There are exceptions, of course, but generally all these are, if you have to do some basic and subsequent activities in the agricultural land, then if the income received, it shall be treated as agricultural income. Income from dairy farming, income from fisheries, remuneration of a manager in an agricultural farm is treated as not an agricultural income. Then a royalty, income from mines and quarries, income from butter and cheese. See, in mines and quarries you are primarily doing, but you are nothing cultivating, right? Now, some other examples. Any dividend or salary from a company engaged in agricultural activity. Earlier, what we told is, in the case of a firm and the partners are getting interest on capital or profit, that is agricultural income. But when it's come to a company, dividend or salary from a company engaged in agriculture is not treated as agricultural income. Again, if receipt from a TV serial shall not be treated as agricultural income, because it shall be given for the farmer for staying, or it shall be used, the farmhouse shall be used as either for dwelling or for storing the agriculture produces. Interest on arrears of rent of the agricultural land. Interest on arrears of rent. See, arrear rent is agricultural income, but interest on the arrears of rent. Suppose one farmer failed to pay the money for 1 month or 1 year, and later on the landlord charged some interest. So that income is not agricultural income. Why? That income is interest, other source. It shall be treated as income from other source, not don't have direct relation with the agricultural activity. That's why. Then purchase of standing crops. If any person is purchasing standing crops, it shall not be treated as agricultural income. Now, income from land used for storing agricultural produces. If any person is using his land for storing agricultural produces, it shall not be used as agricultural income. Income from salt produced after the land has flooded with seawater. Income from making salt is not treated as agricultural income. Now we are getting into another area, that is partly agricultural income. In some cases, the farmers are doing different activities. Say for example, they may be doing, they may be generating, or they may be producing agricultural produces, or cultivating agricultural produces, and they may be running businesses also for transferring or making these agricultural produce fit for the market. So in such cases, we may call it composite income. Here the farmer is doing some sort of business, and at the same time he is doing agricultural activities also. In such cases, what we have to do, we are categorizing what is agricultural income and what is non-agricultural income. So here are some of the particulars. So growing and manufacturing of tea If you are growing a tea and these tea leaves are sold in the market, it is an agricultural income. But if you are growing the tea and converting into this into another form, tea powders, or into in different forms, manufacturing it, processing it, then there is two income arises. One portion is business income and the other portion is agricultural income. So as per the Income Tax Act, regulation says that 60% is agriculture portion and 40% of the income shall be treated as business income, non-agricultural income. Then the second one is growing and manufacturing of rubber. If any person is growing rubber, and if he is selling the rubber in the raw form, no problem. But if he manufacturing, converting into different stages, then 65% is agricultural income, 35 is other income, maybe business income, non-agricultural income we can say. Then growing and manufacturing of coffee. In case of coffee, 75% is agricultural income and 25% is non-agricultural income. And if you are doing some more activities in the coffee, that is growing and manufacturing of coffee ground, cured, roasted and grounded, you have done all these processes and selling it, then 60% is agricultural income and 40% is non-agricultural income. And there are some other items also. Taking the case of sugar, there also we have to determine what is agricultural income and what is non-agricultural income by taking into consideration the average market price of the product or producers. Take the case of sugar cane. What we have to do is we have to take the average market price of the produce and we have to separate the agricultural income and the non-agricultural income. Now, taxation of agricultural income. It is exempt from the tax. Agricultural income is exempt from the tax because agriculture is included in the state list. We have already discussed what is constitution, what are central list and state list, how central government is forming rules. All this already being discussed. So income tax is framed by the central government, but agriculture includes in state list. So agricultural income is exempt from income tax, but indirectly we have to we are assessed or we have to pay some of the taxes. Of course, agricultural income will be excluded, but you have to pay higher rate of taxes for other non-agricultural income. That is called we are giving a term there, partial integration. However, Income Tax Act has laid down a method indirectly tax on such income, and the partial integration of agricultural income with the non-agricultural income. That this is the point that I already told you. Then it aims at taxing non-agricultural income at a higher rate. Now, applicability. How this agricultural income is applicable? It is applicable to individuals, HUF, AOP, BOI and artificial juridical person. They have to calculate their taxable income using this method. Who are the persons? Individual, HUF, AOP, BOI, artificial juridical persons. So there are some other persons, say company, LLP, firm, cooperative society and local authority are excluded from using this method. This method of calculation is excluded for companies or firms and local authorities. Non-agricultural income is another condition is the non-agricultural income shall be more than minimum taxable limit. Minimum taxable limit here is 2,50,000. If your income, non-agricultural income is more than 2,50,000, then only you have to use these methods, and agricultural income shall be exceed 5,000. Only if you have to include this partial integration only if your agricultural income is more than 5,000. and your non-agricultural income is more than minimum taxable limit, that is 2,50,000. Calculation steps. We will learn it, or we will do the practicals or numericals later on, but you have to just understand these steps. Calculation steps. First, what you have to do is compute tax on agriculture and non-agriculture, net agricultural income and non-agricultural income. You have to add it. Then you have to compute tax on agricultural income plus maximum exempted limit, that is the minimum taxable limit, 2,50,000. 2,50,000 plus agricultural income. And finally 1 minus 2. First calculate the tax including your agricultural income into your non-agricultural income. Add both this income. Now you have to second step, you have to add your agricultural income and maximum exempted limit, that is 2,50,000 maybe. General, in case of a general person, that is 2,50,000 plus your agricultural income. Then first what you did is your total income is added with total non-agricultural income is added with agricultural income. One figure may be there, say 380,000. 3 lakh your non-agricultural income, 80,000 is your agricultural income. And in second step you have to add with maximum or minimum taxable limit, that is, or maximum exempted limit, that is 2,50,000 plus 80. As I told you, agricultural income, if 80,000, 2,50,000 plus 80, then 3,30,000. And you are calculating its tax also by applying slabs are there. By applying slabs, if you are calculating income tax, the difference from the first number you may get a tax. First step you may get an amount of tax. In the second step you may get an amount of tax. The difference will be the agricultural income. So all these are the rules regarding agricultural income. Let's sum up again. Agricultural income composed of three things. One is rent received from the land, or income received from agricultural lands through some of the operations such as cultivation, or making the produce fit for the market, or sale of the market, and income from farmhouse. Now in this there are conditions for to treat income from rent from an agricultural land as an agricultural income. There are conditions. And for agricultural operation, what are the agricultural operation have been explained. Then the other conditions regarding to become regarding a farmhouse to become an agricultural income. All these are a small topic. It is very, I hope you understood it very clearly. Okay.